Hello and welcome to Car Dealer Live. I'm James Baggett, I'm the editor of Car Dealer, and today we're talking about the most profitable car dealers in the UK. Our latest Car Dealer Top 100 list, sponsored by Automotive Transformation Group and produced by Interpath, has just been revealed. Now, it ranks dealers, both franchise and independents, as always, by the figure that really matters the most: how much money they make. So joining me to discuss the list is its author, automotive consultant Mike Jones, who's worked with Interpath to produce it for Car Dealer, and from our sponsors, ATG, CEO Tim Smith. Welcome, gentlemen. How are you?
Great, thanks.
Good, thanks, James.
Good to see you both. Thank you very much. We'll come to you in a moment, but I'll just give people a quick rundown of the highlights. So the standout numbers from the list, which focus on Car Dealer's 2021 results. Arnold Clark, unsurprisingly, topped the league once again, racking up £398.1 million in profits. Second was Sytner, the American-owned dealer group that has Car Supermarket Car Shop in its portfolio. It generated profits of £246 million. And in third place was the Evan Howshaw and Stratzone dealer group Pendragon, recently the subject of that takeover deal from Headin that didn't actually go ahead, which clocked up profits of £191 million. Meanwhile, best performing independent dealer was Motorpoint, the used car supermarket, with profits of 32 million. So in total, the top 100 dealers generated £2.6 billion worth of profits in 2021, up a staggering 950 million on 2020. So they're the highlights. Mike, let's come to you first. Let's explain why we use EBITDA profit number as the reason for ranking this list.
Yeah, great to join you and to be discussing the list again. I mean, the reason for using EBITDA is that ultimately in the industry we spend a lot of time looking at profits. At turnover levels, and we can get hooked on who's the biggest. Now, historically, I've always thought that we should be focusing more on profits. And as a sort of proxy for cash generation, and EBITDA, so the earnings, the profits before interest, tax, and then depreciation and amortization of goodwill, is sort of seen as a proxy for how much cash did they generate, and ultimately that's what's important for the businesses. That they're profitable, that they're cash generative, and we're seeing that across the piece now, even with tech businesses and obviously the kazoos of this world. They're having to turn themselves into profitable cash generative businesses rather than ones that are just growing turnover. So that's why we've always ranked. And it's interesting as well to compare the independents against the franchise networks. The independents are always going to have lower turnovers, but that doesn't mean to say they're not generating the profits and also generating a great return for their investors.
And that EBITDA number is, am I right in thinking, is a fairer way of comparing businesses in a sort of like-for-like basis when it comes to these sorts of lists?
It's the sort of industry standard, the stock market standard, as the way that you compare profitability of businesses against each other. I mean, being an accountant myself, there's always loads of different things that can go in there that you could spend months trying to strip out exceptional items and try and get a balance across everybody. But it's a great proxy as a start for who's making the most money, and that they can then use to reinvest and grow in the future.
So an absolute stellar year for the motor trade in 2021. I interviewed Eddie Hawthorne, which was earlier this week, for a YouTube video, which you can watch on our channel. And he described it as a Carlsberg year for the motor trade, which I just thought was absolutely fantastic quote. I mean, what really drove those profits, Mike, for dealers in 2021?
No, I mean, he's absolutely right, because it's, as you said, sort of a 55% increase on the prior year. We've got to remember that was a 40% increase on the year before that. So the amount of cash generated, about a profit generated at sort of 2.5 billion, which is over 2.5 billion, is huge. And what drove it? Wider things that we all know about. But you sort of stand back and go, well, it was the mix of supply and demand. We'd got low levels of supply of new vehicles from all the manufacturing challenges that people had got. So we had a better balance between supply and demand. That then fed through to the used car market, which was massively bolstered on the back of that reduced new car supply. There wasn't the same push into the market that we've had over recent years. and it's sort of, the strong new car profitability, strong used car profitability have really driven these results. If we stand back, we've got a much higher number, or a higher percentage of franchised operators within the top 100 this year. I think the number of independents in there is down to 10 from sort of 12 the previous year. So you can see that the mix has moved, and also that growth in profitability was also strongest amongst the franchise operators, showing really that they're the money that they generated from new car sales, and also the profits they generated from used, by that not being tainted by any new car activity they've done, both combined for Eddie's Carlsberg year.
I'm not surprised that we've seen these profit numbers that you've reported here. After all of the accounts that we've reported on of dealers this year, every single one of them have said another record year, a record year. So it's not surprising those numbers are quite so high. Tim, I'm going to turn to you now. But with many of those dealers on the list, you work with a large number of them with ATG. What are they telling you about their performance in 2021? I mean, I'm sure this doesn't come as a surprise to you that there's such big numbers there.
No, I don't think it does. It's not a surprise to anyone, is it? I mean, when you look at record used car prices, it's just been driving profit to the levels that we're seeing. I think for us, I think we work with about 85% of the top 200, if you like, of franchise retailers in the UK. And for me, I think this is just about these businesses have been doing things the right way for a long, long time. And, given the market conditions, what we're seeing is they've really capitalized on that opportunity in the marketplace. And quite rightly, because for many, many years, it's obviously been a challenging environment. It's a challenging industry. I think for me, the thing that always sets the best performers apart is the ones that have invested in their organizations. They're continually looking for better ways to I think, deliver an experience to their customers, but also in order to operate their businesses more efficiently. I know obviously ATG is a very online driven and very digital driven organization, but I think the experience comes through when you have consumers coming into the showroom. They've obviously come back from COVID and the pandemic and being stuck in our houses with our kids driving us mad for many years. And I think that is the difference. I think that's where we see, the difference in terms of performance.
Mike, when you look at that list, I mean, you've compiled this for 3 years for us now. I mean, Arnold Clark, once again, right at the top there, not real surprises there. Were there any highlights for you?
Yeah, absolutely. There's certain. I mean, Sytner's getting closer. Yes. They're closing that gap at the top now. Obviously, see how we roll forwards. Marshall's would have been higher, but they put in 15 months accounts to the end of March as a result of the takeover. So that's been sort of normalised back to just the 12 months. Some of the, I think maybe for one time only, we've seen in the list some of the manufacturer-owned dealer groups benefiting from the lack of supply push, where they're usually sort of registration houses for some of the for some of their brands, which sort of hurts their profitability. They've very much been in there, but I mean, it's not a surprise. But the key thing for me is the growth in profitability across the piece, and I think particularly as we start looking at a move towards agency for a significant number of brands, this ranking based on profitability is the only way to go. Turnover levels are going to be dropping as a result of the switch to manufacturer direct sale. But that doesn't mean to say that these businesses that we've got in the list are getting any poorer. In fact, they may be able to improve their performance, certainly improve their returns on capital. So I think it's definitely the area of focus. I'm just sort of standing back and going, what an amazing year. I don't expect it to be replicated. No, and I'm speaking to Eddie Hawthorne from Arnold Clark. He did say that he didn't think that they were going to be getting to those heady heights that they had in 2021 again anytime soon. And Tim, I spoke to one dealer this week who described Eddie as the best car dealer in Europe.
And these sort of results certainly do testify to that. I mean, they've got an amazing business, haven't they?
Yeah, absolutely. I think, again, they've done things, and I look at it from a technology perspective. They invested years and years ago, built a really strong team to enhance their digital presence, but that's just an extension of the way that they operate their organization. As I say, I do look at things from a technology perspective, but they were, one of the first to invest in in-house teams to build out their own online and their own technology teams, and that really extends the brand, to consumers through digital mechanisms. And that is just, again, endemic of what they do across the organization. There are people in our company who used to be car salesmen for Arnold Clark, and there was I think a discipline in terms of the organization, sales management, doing the right things, following up leads, making sure that, there wasn't delays in terms of time to respond to customers, which, to be honest, is still one of the things that, turns people off from buying a car. It's about the speed of response. And they do that, and they do that very, very well. So when you see big demand, when you see high prices, it's no wonder they're very, very profitable.
Yeah, Mike, when I spoke to Eddie, unsurprisingly, he didn't want to give away his secrets. But what do you think those secrets are for his success?
I'm sort of reiterating what Tim said, doing things brilliantly. Yeah. I mean, clearly they benefit from scale, albeit, sort of historically, they've benefited a lot when the manufacturers have got more vehicles coming into the country than people wanted, and they bought huge numbers of vehicles into the business and then made great profit off ultimately selling those nearly new vehicles. But this sort of shows that even in a supply constrained marketplace, by doing the little things brilliantly and making sure that they're selling the right things to the right customer, but also retaining that customer, drives sort of medium term, very strong profit levels. So no, I mean, it's not a surprise to anybody that they're there. And I would imagine that they'll have Darren snapping at their heels, but it's a hell of a target to go for.
Yeah, it certainly is. The surprise for me in this list was the lack of independence near the top half of the table, especially with all the results I read from the franchised dealer groups, citing used cars as a big driver for profits. I sort of expected to see more used car independent dealers further up the list. Why do you think that is? Why do you think they've dropped back this year?
Well, one of the challenges for everybody has been getting hold of those used cars to sell. And some of the routes that historically the independents would have found sources for those used vehicles have been constrained for the likes of Motorpoint, who were going for sort of the nearly new vehicles, and for everybody else, the franchise retailers have had to up their game with regards to how they've sourced used cars as well, going more after some of the stuff that would have historically gone to the independents. So I think it's got to such a competitive space. Getting hold of cars to sell has been a challenge for everybody, and I think that's maybe why the independents aren't quite there. I mean, they've not done badly. The independents that are there, their profits are still up 39% compared to the group that we had in there last year. So there's still been a strong profit generation and profit growth. It's just that the growth amongst the franchised operators has been more. And for some of the franchised operators, some of the franchisors, on average, they didn't used to make money out of used cars because they'd got a chunk of really profitable ones, and then they'd got some ex-demonstrators and some pre-registered vehicles that it was a question as to how little they could lose whilst selling them. That bit's gone, or certainly gone for the last couple of years. So they've just been left with the profitable bit, hence why they're sort of lauding the performance out of their used car departments.
I think part of that as well is its access to demand and scale. If there's a lack of new car supply, people are going to trade, into potentially used vehicles. But, as they trade out as well, they're getting great trading value from, franchise dealers, because there was a confidence, of course, that in being able to turn stock very, very quickly, make a profit, no matter, it's 5-10% above cap sometimes. I mean, it's absolutely crazy, the speed in which used vehicle prices were going.
Yeah.
And so I think that access to the scale has just seen, an inevitability in terms of the numbers coming through.
Tim, anything stand out to you on that list? Any individual names or surprises for you?
No, not particularly. I mean, the one that I'm interested in watching, they're a big customer of ours, but what happens with Marshalls and in terms of the consolidation, that's going to be really, really interesting. The way that's a sort of a vertically integrated organization, and how that's put together, how that pans out, and how that impacts competitors and the next few years. I will be really interested in seeing that.
Yeah, I completely agree with you. That's going to be fascinating to see how they integrate Cinch and Marshalls together. Let's have a little chat about 2022. I mean, we're obviously publishing this at the end of 2022. Some of the dealers that I've spoken to have said it's been tougher this year, and they were probably not going to see the sort of numbers that we saw in 2021. Mike, what's your gut feeling on what this year holds?
Yeah, I think this year has undoubtedly been tougher for people, and I think as we roll forward to next year, that's going to continue. We've got the cost of living crisis, the inflation and increasing costs, both from a utilities etc. point of view, but also staff wages is starting to pinch on profitability of retailers. So no, I don't think the 2022 numbers are going to be as strong as 2021, and I think 23 is going to see a drop. I mean, we're a bit with the strong order banks that people have built. That's meant that they've not managed to effectively sell as much in 22 as they could have done if there'd been the supply of vehicles. But it does mean that we've got a bit of a cushion going into 2023 as we do actually ultimately deliver the vehicles that we've taken orders for over the course of the last 6-12 months. Do
you think we'll ever see a year like 2021 again?
Not from a market dynamics point of view, no. I mean, I think the trade will ultimately go back to a level of supply push. I think the numbers of new cars will increase, albeit not back to the heady heights that we saw 10 years ago, or even slightly more recently. I don't think we'll be back up those numbers, but I think there will be an element of supply push, and that will ultimately hit the sort of retailer profitability.
And those 2021 numbers were helped in part, weren't they, by some government support? I mean, there was still some retail rates relief. There was still some furlough that would have been accounted for in that third lockdown in the beginning of 2021. Yeah, absolutely. So particularly from a rates point of view, yeah, no, that was still working its way through, and as has been sort of remarked in the trade and mainstream press, not that many of the businesses paid it back. Right. It has been banked. So no, that did support at the start of the year, albeit that the retailers were doing their bit by keeping the staff on. And we didn't see the mass redundancies out of the sector that we could have done if without that sort of furlough and rate support. I mean, from the industry, it's a whole wider issue, but the sort of rates discussion is it just shows that it's not balanced with regards to the level of rates that these retailers are having to pay on a sort of on an annual basis. Tim, I don't know about you, but I seem to think that the motor trade needed a good year. I mean, they've all too often have been kicked and feel like they've had some struggles. And I think that 2021 results they were due some good luck. What do you think?
Yeah, that's damn straight, to be perfectly honest. I like positive things happening to our industry, and it's great to see it. We all benefit from that. Yeah. I think the industry as a whole, does have a perception outside of it, which I think is very unfair in a lot of respects. But yes, so, I mean, hopefully long may it continue. The only thing that I was going to say is, moving into 23, as Mike sort of touched on, there's a lot of uncertainty, isn't there? And I think it's going to be a really challenging year. We've faced a lot of increases in costs as businesses across the piece, but now we're sort of demand potentially is going to really soften off. I think we are, we just got to batten down the hatches, keep ploughing on in terms of being efficient as organisations. But it was, and it is good to have that positive news. Not sure it's going to be quite so positive if we do this next year.
No, I mean, I think, Mike, just finally looking ahead into 2023. I mean, what are your thoughts there for what the market's going to hold for dealers?
I think it's going to be. I think it's going to be tough. I think everybody's going to be feeling the pinch, and that goes. I mean, the traders always, or certainly the franchise traders, always been cushioned from some of the vagaries, just purely as a result of the franchise system, so that the brands need the retailers to make over a medium term an acceptable return. Historically, when they do have a bumper year, it tends to be a lower next year, as you sort of get that balance of targets and remuneration. So I would have accepted a swing in 2022 and then into 23. I think we've got electric supply starting to come back. So we'll see those coming in a more meaningful way into the market. Clearly, some of the brands are moving to agency, some at the start of January, and then dripping in through the year. And that's going to be a big change from an operations point of view, as well as from a customer point of view, almost at a time when we've got enough challenges to deal with. But I think the sort of the retailers that see their way through that work out how they're best to set their business up, and the ones who do a brilliant job with their customers are still going to prosper. That will happen irrespective. And the business model's set up actually quite well to cope with a recession by having the multiple different income streams and the used cars and after sales as well. And for the majority of people outside of London, certainly the car's a necessity. So it's the multiple income streams do always help them as we move into a period of recession. So I think it's going to cool off, but I don't think it's going to be a massive issue. Certainly not that we might see on some of the high street retailers or something like that.
Good to finish on a positive there. Certainly not going to be boring. Thank you very much to both of you for giving up your time and your insights today. I really appreciate it.
Thank you very much.
Good to see you both. So that's automotive consultant Mike Jones, who worked with Interpath to create our top 10 list, and Tim Smith, CEO of ATG, the sponsors of the Car Dealer Top 100. Right, to find out who else is on the Car Dealer Top 100 list, log on to our website, cardealermagazine.co.uk, and click on the Top 100 tab at the top of the page. I'll see you next time. Thank you for joining me. Goodbye.